Our guest says the market sell-off has opened up buying opportunities. He says he is going long some U.S. names now that valuations have been reset. Let's find out more. We're joined by Sebastian, founder of Option Pit and Chief Investment Officer at Karman Line Capital. Thanks very much indeed for joining us. Always great to see you, Mark. You say under the surface yesterday, things weren't that bad when you look at the equal weight market.
Yeah, yesterday was very much a top-heavy sell-off. The selling obviously started with Apple, but then also polluted into NVIDIA, Amazon, all the major players, and then kind of that next tier down, the financials. A lot of the names that had really taken off post-election, they've now been kind of cut back. Today's a little different. Today, believe it or not, I know that we're down 25, but you're starting to see a little bit of rotation into risk on today, even with the market down. Money is coming out of Apple, but money coming out of Apple is a good thing for the overall broad market. Apple has, in a lot of ways, taken partial place of U.S. Treasuries for some players in the market. When they're scared, they'll actually move into Apple rather than U.S. Treasuries, given the kind of the volatility that we've seen in the bond market over the last, 6 months, 6 to 9 months. Apple, when you look at it, is a kind of safer play, plays a dividend. They've got the cash on hand. So money has been kind of flowing into Apple when it's scared. So on a day like today where we're down 40, Apple down big, but you can see that we're starting to see a little pecking in some of that next tier down in Mag 7. Amazon is up. NVIDIA is getting some pecks. Tesla. Microsoft, Meta, you do have some money flowing into there and coming out of the safety place today.
That's really interesting. Apparently in the golden days of Ma Bell, if you had a check from that company, you could cash it anywhere. It was like a government check. And Apple almost seems to have achieved that cult status. I mean, it's so gigantic and it's seen as so stable.
Yeah, I mean, Apple is a different beast. People need to kind of reset their expectations of what it is. And I love the comparison to Ma Bell, kind of what it is now, right? Everybody has an iPhone in the United States and Canada, and they have this big annuity that comes in. But the kind of hockey stick growth in sales and in revenue, that's gone the way of the dodo and has moved down to names like an NVIDIA. I think there's some upside in Microsoft and Meta. I think Apple made a strategic error not kind of diving into their own AI and partnering with Microsoft rather than developing their own. I think it makes them dependent on other people, and it kind of points to what Apple is, not an innovator, but a producer and a cash machine.
It's interesting, isn't it? I wonder, could you say that about a lot of the tech stocks these days? They're not really innovators. They're just finding better ways to spy on us and sell us ads.
That's a fair argument. Microsoft is doing some cool things with its dive into AI. Obviously, NVIDIA, if this AI boom is real, which is still yet to be decided, NVIDIA's valuation is somewhat fair here. Meta, clearly people think what they're doing has some upside. And so there are some spaces where, some of those PEs do make some sense. One thing that's kind of interesting is Amazon. Amazon for years, right? What was it known for? They never make money. They have this ridiculous price earnings ratio, 75, 80, 90. It's a growth company. It's never going to be a value. That its price earnings ratio is down to 35. That's about what Apple is. Think about that. Apple has a 33 price earnings ratio. Amazon has a 35. Which one do you think has that hockey stick upside growth of the two when you compare those valuations and that multiple? And the answer is Amazon.
That's interesting. What about IBM? Maybe you could put up a 10-year chart for IBM. I mean, they were actually a pioneer in artificial intelligence. They had that wonderful chess program years ago. Are you interested at all?
Yeah, I mean, it seems the amount of times IBM has been so far ahead of the curve and then managed to end up behind the curve is stunning. If you look at what they've done over the last 25 years, they're just a Xerox GUI away from really having egg on their face, but they seem to have figured out. They are applying AI. They're one of the firms that is actually making money using artificial intelligence by selling this to their customers through their consulting businesses. This one probably has some continued upside and maybe has found a way to get back to that growth that we saw, 30, 35 years ago, in the AI space. They're one of the pioneers. They're one of the firms actually making money in that business.
What about Tesla? Is that tempting you at all?
Here's what I will say is Tesla is, for me, is a trade, not so much a big long-term investment. However, with the way they've kneecapped that thing, and then looking at how options flow. So one of the things we look at here at Option Pit is what we call option fingerprints. And we see bigger, long-dated call buying in a name. That tells us that those are big banks kind of positioning themselves to try and go long a name. And we're starting to see some of those fingerprints develop in Tesla. Traders are trying to find a bottom in here and potentially catch a swing higher if it does catch a bid back toward $300 a share.
Fascinating times. What is your feeling, Mark? Just go up to 30,000 feet or whatever altitude aircraft fly at. Are we at a major turn in the market, or is this a blip?
I mean, this is kind of the inflection point, right? The S&P is below the 200-day moving average. We've hit correction territory. But I'm encouraged by money coming out today. Even though we're flattish down, money coming out of safety and moving into some of the high beta names. You can see Palantir's up today, Reddit, a lot of those high beta names. That is near term bullish. I don't know if the selling is over, but I think we've had a little bit of selling exhaustion here, and you could see a day or two of rallying. I think there's a little bit of hope around this Trump meeting with business leaders that maybe there's a little bit more clarity on strategy going forward coming out of this, maybe. But right now, am I going all in long? No. But is this a spot where I'm starting to peck at names? I'm going to buy a little bit more Reddit today. I'm probably going to do a little bit of situational trading in Tesla. Looking at Microsoft, adding a little bit of that. This is a spot where I think it's worth pecking, but not going all in.
Mark, always great hearing from you. Thanks very much indeed.